Welcome to the deep dive. It's May 1st, 2025, and wow, Bitcoin is definitely the talk of the town right now. Price is hovering around, what, $96,000, $97,000?
Yeah, it's really buzzing. And it's a pretty significant rebound when you think about it.
Totally. I mean, up 28% since that dip in April. Around 74K, was it?
That's right. And even from the February low, near 79K, it's up 21%. So yeah, quite strong recovery. Definitely signals something is going on.
Absolutely. So the big question, the one you're probably asking, is what's actually driving this? And more importantly, what could it mean for you?
Right.
We've been digging through quite a bit, market reports from Binance Square, various financial news outlets, even some local reporting, all focused on Bitcoin's latest moves. And our goal today really is just to cut through all that noise, give you a clear picture of the Bitcoin landscape right now, focusing on what seems, most important and interesting.
Sounds good. So where do we start? What's the main catalyst, would you say?
Well, it really feels like the big players are back in the game. That institutional interest seems key.
I agree. That Binance Square overview points directly to renewed institutional appetite as maybe the primary force behind these gains.
And we're seeing concrete examples, aren't we? Strategy, MicroStrategy as they were. They're still buying.
Oh yeah, big time. The Bitcoin approaches $100 K piece. Details it. They grab another 15,355 Bitcoin.
15,000, wow.
Yeah, brings their total stack up to 553,555 BTC. And get this, their average purchase price is around $68,459.
So they're doing pretty well on that bet.
Extremely well. They're reporting a 13.7% yield year-to-date already, and apparently aiming for a $15 billion gain on Bitcoin this year.
15 billion. That's quite a target. It shows real conviction, doesn't it? Buying aggressively, even at these prices.
Exactly. It's a powerful signal, Beyond just short-term trading, it suggests a really deep, long-term belief.
And it's not just them, is it? We're hearing about sovereign wealth funds, too.
That's another interesting piece. FinTech Weekly mentioned Coinbase Institutional is seeing more buying from sovereign wealth funds in April.
Okay, so countries, essentially, or their investment arms.
Pretty much. And the thinking seems to be viewing Bitcoin as a kind of hedge. Protection against currency devaluation, maybe broader economic jitters.
Because it's scarce and not tied to one government.
Precisely. That scarcity, the fact it's hard to change immutable and you can move it across borders without asking permission, that's appealing when things feel unstable.
And that institutional interest, it's showing up in the investment products too, like the ETFs.
Oh, definitely. FingerLakes1.com reported huge net inflows into the U.S. spot Bitcoin ETFs, like $2.68 billion just this week, up to Thursday.
$2.6 billion in a week.
Yeah, biggest inflow week since December last year. So that's a major channel opening up for institutional money.
It feels like the walls between traditional finance and crypto are kind of getting lower.
That's a great way to put it. The same source mentioned Morgan Stanley, SoFi. More traditional players are offering crypto services. It's becoming, more mainstream.
Okay, so institutional money is clearly a huge factor. What about the charts? What's the technical picture telling us? Market mood.
Well, technically, things look pretty constructive. Binance Square talks about higher lows.
Meaning the dips aren't dipping as low each time?
Exactly. Each pullback finds support at a higher level than the last one, which usually suggests the upward trend is, intact. Sentiment feels sort of neutral to cautiously optimistic.
And there are specific price levels traders are watching closely, resistance and support.
Yeah, the resistance to the sort of price ceiling seemed to be around $95,800 and then $97,400.
Okay.
And on the downside, support levels, the floors are pegged around $93,000 and $91,300. That $91,300 is also the 111-day moving average, which is a key trend indicator for some.
Right. And there was that interesting idea about a possible dip first to gather liquidity.
Yes, exactly.
Yeah.
Some analysts suggest we might see a brief pullback, maybe into that $93,000 to $93,800 zone.
Why would it do that?
The theory is it shakes out weak hands and finds a cluster of buy orders liquidity needed to fuel the next leg up. Like gathering energy before trying to push through, say, $97,400 or even towards $100.
Makes sense. So for active traders, there are specific plays being discussed based on these levels?
Yeah, Binance Square outlines a couple. A breakout strategy if Bitcoin pushes firmly above $95,800 and stays there.
Buying the momentum.
Right. Or a pullback strategy, maybe looking to buy around that $93,000 support if it dips, but then shows signs of turning back up.
And they mentioned targets, where to potentially take profit.
They do. $97,400, $99,000, and the big one, $100,000. But crucially, they also stress using stop losses.
Always important. Managing the risk.
Absolutely critical. They suggest things like only risking 1-2% of your capital on a single trade, aiming for a good risk-reward ratio, like 2-to-1 minimum, and staying aware of the news.
Good advice. Now, zooming out a bit, longer-term views. Any seasoned analysts weighing in?
We do have some interesting perspectives. Peter Brandt, a veteran trader, has put out an estimate.
Oh, yeah. What's he thinking?
The Bitcoin Approaches $100 K article mentions him suggesting a potential peak of maybe $125,000 to $150,000.
Wow. Okay. When?
Possibly by August or September this year. If, and it's a big if, Bitcoin gets back on that steep sort of parabolic upward curve.
But he usually adds a note of caution, doesn't he?
He does. He warns that after those kinds of sharp rises, history suggests a major correction could follow, like 50% or more.
Oof. So, potentially high highs, but also a significant drop afterwards. That's quite a range. What might signal one outcome over the other?
That's the million-dollar question, isn't it? You'd look at the strength of the climb, the volume, whether it feels sustainable, broader market conditions, lots of factors.
Right. Any other analyst takes?
Axel Adler Jr. also had some thoughts in that same piece. He sees Bitcoin possibly entering a start rally zone.
Meaning?
His bull case, if things go really well, could push past $150,000, maybe mirroring patterns from past cycles.
Okay, another optimistic view.
But he offers other scenarios too. A baseline case, if new money stays sort of minimal, might see it range between 90K and 110K. And if things turn negative, maybe it drop back to the 70K to 85K area.
So a wide range of possibilities still depends heavily on capital flows and sentiment, it seems.
Definitely highlights the uncertainty still present, even with the current bullishness.
Now, stepping back again, how does Bitcoin fit into the wider market? We often hear about it decoupling from stocks. Is that holding up?
Well, it's a bit mixed, according to that Bitcoin Approaches $100 K article. Recently, like in the last week or two, Bitcoin and altcoins have kind of tracked the S&P 500's moves.
So not decoupling in the short term?
Not perfectly, no. But if you zoom out, look at the last few months, crypto has massively outperformed stocks.
Ah, okay. So short-term correlation, maybe, but longer-term divergence.
Exactly. The total crypto market cap is way up over 6 months, while the S&P 500 hasn't seen nearly that kind of growth, maybe even declined a bit in that time frame. So the decoupling narrative might hold more water over longer periods.
What could cause that short-term link? Just general market fear?
Could be risk sentiment. When investors get nervous, they might sell both stocks and crypto. But the longer-term drivers for crypto adoption, tech, the hedge argument, are kind of unique.
Makes sense. What about big economic factors, like the Fed?
Yep.
Any potential policy shifts on the horizon?
That's always a big watch item. The article notes people were watching the Fed closely. There was some chatter about them maybe considering asset purchases again, which could boost risk assets like crypto.
Buying bonds again? To ease pressure?
Potentially. But that recent dip in U.S. GDP actually made a Fed rate cut seem less likely in the near term. So it's complicated.
Yeah. Does economic uncertainty maybe help Bitcoin in a way? The digital gold idea?
It can, yeah. For some investors, worries about inflation or currency stability make something outside the traditional system like Bitcoin look more attractive as a store of value.
Interesting. And speaking of governmental views, one source mentioned a potential U.S. strategic reserve.
Ah, yes. Bitcoin's bullish outlook reported on an alleged executive order from President Trump back in March, establishing a U.S. strategic reserve of around 198,000 BTC.
A strategic Bitcoin reserve, like the oil reserve.
Sort of, yeah.
Yeah.
Now, we need to be clear this is reported. If it's accurate, though, that would be a pretty major signal of government acceptance, wouldn't it?
It certainly would. Okay, so Bitcoin's obviously getting the headlines, but what about the rest of the crypto market? Are altcoins moving too?
They are, yeah. The Economic Times gave a quick rundown. Ethereum is seeing steady growth, DeFi, smart contracts, plus those scalability upgrades helping.
Right, ETH.
XRP is holding stable despite its legal issues, mostly on the back of its cross-border payment focus and partnerships.
Okay.
Then you've got BNB, linked to Binance, obviously growing. Solana is still known for its speed. Dogecoin, well, it's Dogecoin, driven by its community. And newer ones like Sui and Chainlink are making noise too.
So broad strength across the crypto space, generally.
It seems that way, yeah. The whole sector feels pretty dynamic right now.
Now, with this price surge and all the institutional buying, there's a question that keeps coming up. Are regular retail investors going to get priced out?
That's a definite concern, yeah. Both Bitcoin Approaches $100 and FingerLakes1.com touch on this. The worry is that as these big institutions soak up supply, The price just climbs too high for the average person.
I saw that quote from Sergej Kunz, the One-Inch co-founder, basically saying, get some Bitcoin now before you can't afford it.
Yeah, pretty stark warning. The idea is that if institutions keep buying, and maybe corporations start holding it on their balance sheets more widely,
the available supply just shrinks?
Potentially, yeah.
Yeah.
Driving the price up significantly. Some forecasts based on that thinking go really high, like over $1 million per coin by 2029.
$1 million, wow. That's based on assumptions about institutional and corporate holdings.
Exactly. Taking current ETF holdings, corporate treasuries, and projecting that forward. But there was a counter-argument. Market analyst Joe Burnett, also in the $100K article, suggests maybe some of these big institutional buys aren't entirely new money coming into Bitcoin.
What does he mean, like shuffling deck chairs?
Kind of. He thinks it might be existing Bitcoin holders or funds just reallocating their exposure, maybe moving from futures to spot ETFs, for example. His point is that truly price-moving capital needs to come from outside the current ecosystem entirely.
Ah, okay. So not necessarily new demand hitting the spot market as hard as it might seem.
That's his perspective. So different views on how much impact these big buys actually have on accessibility for retail.
Interesting distinction. Okay, looking forward then. What are the predictions? Are analysts seeing $100 as achievable soon?
Several think it's definitely on the table if the momentum keeps up. Fingerlicks1.com mentions that $100K test potential.
And beyond that, for the rest of 2025.
We're seeing some pretty bullish calls. Bitcoin's bullish outlook lists a few. Peter Chung sees $210,000 by year end. Yeah. Standard Chartered Bank is forecasting $120,000 just in this current quarter. And CoinCodex gives a range, but it goes up to about $180,000 for the year.
Those are some big numbers. Is there anything in the data supporting that kind of optimism on-chain stuff?
Well, the same source mentions on-chain data suggesting a shift towards more long-term holding. People locking up their coins.
Hodling.
Exactly.
Yeah.
And reports of significant buying by the whales of big holders. That usually signals confidence.
But volatility is still expected, right? Especially around big numbers like $100 K.
Oh, absolutely. That $100 K article reminds us to expect price swings. Psychologically important levels always bring turbulence.
Okay, so let's try and wrap this up. What are the main things you think people should take away from this current Bitcoin situation?
Well, I think the key things are Bitcoin's in a strong bullish phase right now, largely fueled by that returning institutional interest and serious money flowing into the spot ETFs. Market sentiment is generally positive.
Right, but maybe a pause first.
Yeah, despite the strength, some technical signs point towards possible consolidation, maybe a bit of sideways action before a real attempt at breaking $100 decisively.
And the whole institutional versus retail thing.
That's a big ongoing theme. Real concerns about affordability for smaller investors as institutions move in, but also that counterpoint about whether all the big buys represent truly new demand. It's something to watch.
Definitely a complex picture. It's certainly not boring. Which leads us to a final thought for you, our listener. Given everything we've talked about, the institutional rush, the price predictions, the potential hurdles, how do you see Bitcoin fitting into the bigger financial picture going forward? What opportunities or, frankly, challenges might this create for individual investors like yourself in the coming months and years? And maybe what other questions does this deep dive make you want to explore further?
Lots to think about.
Indeed. Thanks for joining us for this edition of The Deep Dive.